Welcome back to Tokenize. My name is Simon Taylor here at the Avalanche Summit from the Tokenize podcast. And today I'm talking to Maredith Hannon, who is Head of Business Development for Digital Assets at WisdomTree. How are you doing, Maredith?
I'm well. Thank you so much for having me.
Thank you for joining us. It's been a little collection of friends here already. We're seeing lots of good friends, and we're excited to have you join us. Can you tell us a little bit about you and a little bit about WisdomTree?
Absolutely, sure. And again, thank you so much for having me. So I'm Maredith Hannon, and I lead business development, as you mentioned. So what that means at WisdomTree is sales and partnerships. So I spend the majority of my time with the DeFi community, also with the TradFi community that I think we'll talk a bit about today, to really understand what this intersection of DeFi and TradFi could be and how to bring more assets onto chain in a really, really thoughtful way. And I'll talk about this more, I think, through the rest of the questions, but with a real focus on meeting our clients where we are. So WisdomTree is an $110 billion global asset manager. The heritage is very much in ETFs and ETPs. So you might be thinking to yourself, so why are you in tokenization and how did we get here? But if you think about what an ETF or an ETP is, it's again an exchange traded fund or product. It's really a new wrapper compared to a mutual fund or to other traditional wrappers of assets. And it created an opportunity for standardization, meaning you could just use a brokerage account to purchase all of these assets. Liquidity, obviously they're exchange traded, and then also standard transparency in terms of what the underlying basket is. So those three principles are a lot of what you'll see in tokenization as well. It's really a new, better wrapper to provide access to our end investors for traditional assets. So really excited to talk a little bit more about what that means and the platforms that we have.
That's a powerful frame and very, very useful. Whenever you can just describe something as something you've seen before, but with a new technology, I think it helps the penny drop for a lot of folks. But just changing gears ever so slightly, one thing we've been asking everybody today is, why do you think stablecoins are so hot right now?
So this is an interesting question because stablecoins, and just looking at the stats this morning, there's 260 billion in assets in stablecoins. There's over 160 million stablecoin holders. So while it feels really hot right now, this has definitely been an active market for quite some time. And I think the crypto community, but also just retail investors, have been using these assets for cross-border payments, to be able to access different types of assets that maybe they couldn't have before via wallets. We were having this conversation about buying a cup of coffee before using a stable coin that you're able to do now. So I do think that all of that has been happening for a few years. I think why it's so hot right now is that there's so much opportunity. There's so many new stablecoin issuers. And as more assets come on chain, like treasuries, like equities, there needs to be that mechanism, that payment mechanism and that settlement mechanism. And stablecoins are a perfect example of that. They're 24/7. There's 365. They're off the traditional banking rails, meaning from a timing perspective, you can really instantly transact. And a lot of what is done in traditional finance requires pre-funding, requires capital pools. All of that is eliminated using stablecoins. So beyond just the use case of it, I also think, especially in the US, the stablecoin legislation and a lot of the headlines around that has given this a lot of airtime, literally and figuratively, and also really increased what the market is looking like.
It's crazy that a lot of institutions are dealing with the fact that their settlement windows are closed at a weekend.
Absolutely.
And it's 23/6 with FedWire, and that's just, you can't trade on Sundays. It's just impossible. And in this global 24/7 instant world, it's just not fit for purpose. And it kind of leads me to, why do you think that the DeFi and TradFi world are converging, and why is that happening now? I think you're sort of uniquely placed to see that.
We absolutely are. And I think this is where there's two sides of this. There's, on the TradFi side, the use of this technology internally from a cost savings perspective, and an efficiency perspective. I think a lot of players are really starting to see, and not necessarily that entire trading desks are now on chain, but it's one process of a sales contract, or it's one process of cross-border payments, or it's one process of, in our case, a CFO wanting to use a money market fund or a stable coin to be able to do account-to-account transfers instantaneously over a period of time. So there's use cases like that. But then I also think that there's a huge community that has been brought on chain. And we've seen this with the advent of whether it's Bitcoin ETFs or also Ether ETFs and ETPs that are launching here in Europe. We have a full suite of crypto ETPs that have been around for many, many years beyond the US market, dating back to 2019. So I think this new asset class has really brought a lot of attention to the TradFi space to say there's a new asset class, but now there's also a new use of technology. How do we think about a better world that we could live in that's more efficient, that's also more transparent, and potentially some cost savings too? So I think those are the key factors that have really led to both the DeFi space and the traditional finance space to converge and come together to say, what if we create a world that's a little bit better than what we all grew up with?
And it's interesting that the institutions are going on-chain fully. As a $110 billion asset manager yourself, as an institution, where do you see the key opportunities, and what do you think your peers and yourselves see in this market space over the next few years?
Sure. So I think for us, we're very unique in terms of our approach. So we have 13 tokenized funds, which is more than anyone in the traditional finance space that I know of, actually any asset issuer. So whether that's a money market fund, whether it's a full fixed income suite, equity products, asset allocation models, we have this entire suite plus a gold token and a stable coin to be able to offer, again, this access to our customers. But what that means is meeting them where they are. So on one end, we have WisdomTree Prime, which is a retail-based mobile app for US investors that you can go in. It looks and feels like any other finance app that you have, but you can buy gold in less than 30 seconds. You can invest in Bitcoin. You can also invest in a WisdomTree 500, meaning a US large cap product. You can also invest in a money market fund, and then you can spend off of those assets with a Visa card.
Yes.
So it's really the power of this technology being able to be used that you can hold all of these assets in one wallet and spend off of them. The end client has no idea that they're on chain. It's obviously in the terms and conditions, but it's not.
It doesn't feel like
it doesn't feel like it. You don't have to set up your own wallet. You don't have to remember passphrases. You don't have to be able to have gas loaded into your wallet to make transactions. All of those steps that are barriers to entry for the retail market, we've abstracted away. And again, meeting clients where they are on their phone. On the other side, we call it an institutional platform, but it's really a B2B and a B2B2C platform, WisdomTree Connect, that's meeting the DeFi clients where they are. And that means within their own wallet setups. So clients are using BitGo, they're using other types of custodial platforms and wallets, and they want to access our assets, but they don't want to necessarily have to go to WisdomTree, set up our own wallet that can only be used within our own ecosystem. They want to be able to hold it in their existing infrastructure.
Yeah.
So we built this platform that is ERC20 based in terms of all the tokens that we offer. And then also we have, and this I think is really important, is from a KYC perspective, because I know we'll get to regulation, this is really key. The clients on board with us, but then we send them a soulbound NFT.
Oh, wow.
That is, it's an ERC 721 to get technical. It's upgradable. And then that denotes that wallet as being a WisdomTree client. So what that means is you can access all the assets that we have and any other assets to come. So it's not just, oh, you are onboarding for one money market fund or one equity fund.
It's not one-to-one.
It's
I'm
a
in
marketplace,
the store where I can buy all the products.
Exactly. Yes. It's anything that's on the shelf and anything to come. But what's really key about this is what that means is that if you're a WisdomTree Connect customer, and so am I, we can also peer-to-peer transfer to each other. So then that enables us to create essentially a network of networks solving this KYC and identity issue that we can also over time add other networks that we would accept and really creates, I think, the next step in DeFi for TradFi players that it again it removes that you have to come to the financial institution directly to gain access. You do to KYC, but then beyond that, it really creates a peer-to-peer type of transfer opportunity. So I think for both of those are really, really key functionality of meeting either clients where they are on chain or meeting them on their phone, which is where they are, yes, and provide broad-based tokenized real-world assets.
Is there a third answer, which is like I'm like a consumer app, I'm a consumer brokerage, and would I use Connect for that? Would I use something else?
Absolutely, great point. So that's why I was describing Connect as a B2B and B2B2C app, because we not live right now, but down the line, absolutely, there's opportunity for there to be a consumer app on the other end that you would also be accessing these assets, but it would look and feel like it would be from your local regional bank, as an example.
Yes, that makes complete sense. I want to talk a little bit about why the demand has really shifted into real world assets going on chain, which I still find a slightly odd phrase, but traditional asset classes kind of becoming tokenized. What is the core impetus there? Who's the buyer? Who's the seller? What's the business case?
Sure. Yeah. And I agree. The terminology is always interesting, but it's stuck. So for tokenized real world assets, I think there are a few different client profiles. So like I just mentioned from a retail investor's perspective, they want to hold Bitcoin, they want to hold a US large cap, they want to be able to hold a money market fund. Mm-hmm. Enabling tokenized real world assets to come on chain means that there are alternatives to only buying ETFs or only buying ETPs, that you can actually hold spot of the crypto and then also be able to buy funds. So I again just think meeting retail customers where they are, which a lot of them are becoming on chain in a new and really creative way, I think is really important there. On the flip side, for institutions, we work with a lot of stablecoin issuers, we work with a lot of foundations. I mentioned CFOs before. This is about timing, and it's also about settlement. So it's being able to access a money market fund, for example, 24/7, 365. Soon we'll have instant redeemability of these assets as well. That you're able to, again, hold them within the same wallet construct that you're using today. So that means that, just as an example, you don't have to sell out of Bitcoin, get cash, move that to your brokerage, move that from your bank to your brokerage to then buy a money market fund. Yeah. That's it's at a minimum 48 hours. And speaking with some of our friends here, it can take 3 to 5 business days. Yeah. So think about not even just the time, the operational burden, but also you're missing 3 to 5 days of yield. Yes. That's 4 or 5% that you were missing out on versus doing it on chain that now you're capturing that day's yield.
Yeah, instantly. As a veteran of the fintech world, I always thought about open banking and how was I going to aggregate all of this. And there was a real push in the financial market space to try and aggregate and create one wallet to rule them all. But actually, this is the inverse, that you come from the token up. Absolutely. And you get all of that feature functionality kind of out of the box. So I think to unlock that, though, and take it to the next stage, the confusion, the chaos has always been about regulatory clarity. Mm-hmm. You've been in a lot of conversations with regulators as an organization. How have they shifted, and what are you hearing, seeing that you think is important for the industry to be aware of?
This is a really interesting one, particularly for us, because I mentioned before we have this suite of 13 tokenized funds. These are 40 Act funds that are effective with the SEC. So we went through the entire process of working with our local regulators in the US to really explain what this technology is and that it's an application of this technology while still using the existing framework and laws of what 40 Act funds mean. And there's a lot of benefits to those, whether it's bankruptcy remoteness and even just having a trust board, but really being able to have this regulatory structure was important to us. Mm-hmm. We're a publicly traded company. We're a regulated financial institution. We believe in going through the, quote, front door and really responsible DeFi. And we've seen a lot of options, if you've been in the space of a while, of not being responsible with clients' assets. So we do take that that very seriously. So I would say we went through that over the last 4 years. We also have a New York Trust license. We have MTLs, which is money transmission licenses too, per state. So again, we're very heavily regulated, but that's really for the protection, but also of our end customers, and also a belief that that's the right thing to do. What we've seen now, I think, with changes in whether it's with the presidential change or even just shifts within Congress, I think it's actually really encouraging in terms of the stablecoin bill that we talked about before, but even a really pro-business mindset that we're excited to see what the next few years bring, but very much still focused on regulation and working with our regulators to deliver products that are beneficial to our end clients.
I like that nuance that you added right at the end there, which is this shift in posture from the new administration, from regulators, doesn't absolve responsibility of working with regulators and leaning into it, and that role of an institution and maintaining that credibility. How much do you see that being a differentiator for WisdomTree going forward? And sort of, what do you think the risks are? Because are we going to see another blow up if people feel like you can just run away with things a little bit?
Absolutely. I think for us, we do see it as a competitive advantage. I think the structure of our products leads us to, I mentioned bankruptcy remoteness. I mentioned the establishment of really clear transparency in reporting holdings. We have a prospectus. We have a lot of requirements to meet for these funds to be 40 Act funds. And those rules are in place for a reason, for things that happened, close to 100 years ago. And we really do believe that that's an important part of offering, especially investment vehicles to retail investors, that those are established in a way that safeguards and protects them. In terms of what it means for what could potentially happen, we've been in crypto in this space for a while. There is always something new to watch, but I do think that for me, and I think especially for our firm, the transparency to the end investor is critically important. And if we're asking or maybe not giving advice, but suggestions, is read the fine print for sure as an investor in terms of what these products are.
Definitely always read the fine print. Where can people find out more about what you're going to get up to in the near future? Could you tell me a little bit about your plans for the next 6-12 months?
Sure, absolutely. You can find me on Twitter, LinkedIn. We're very active, WisdomTree.com. Lots of good resources there too. But over the next 6 to 12 months, we will have a lot of announcements related to a lot of the things that we've talked about here. So whether it's DeFi integrations and really providing new utility for our assets to be used on chain in some really cool, interesting ways. And we should also maybe have some new products coming out too that I think will be really exciting. So stay tuned.
Come back to Token.
Yeah, I will.
Tell us all about it.
I'd love to.
Thank you so much, Maredith.
Thank you so much. I really appreciate the time.